All right, welcome everybody. It is 9/21/2020. We're gonna do a little review about how to find MOMO stocks. This is for people who have asked me, how do you find which stocks to play in the morning? What do you look for? How do you know if they're gonna pump and dump, if it's gonna hold? All of those questions. This is my playbook and what I do and the path that I take to create a thesis. Oh, thank you so much for that, Kevin. I love it. Helping me out with the disclaimer. Let me pull it up. All right, so Raging Bullets employees are not licensed investment advisors, registered brokers, and we encourage you to consult such professionals before making any investment decisions. Please keep in mind that the discussions today are for educational informational purposes only and should not be relied upon or construed as personalized investment advice tailored to or appropriate for any particular investor. Lastly, please know that there are no guarantees in investing, and no matter what has been successful for someone in the past, your results may vary. Raging Bull strives to help educate people on how markets work, but actual investment results will vary widely based on market dynamics, experience, skill, risk mitigation practices, and the amount of funds invested. There we go. I wonder if we could just put that up on the screen and say, take a look, Yeah, Tiffany, Peloton's killing it. Yeah, today's been a good day so far. Real good day. So now the job for the rest of the week, right, is we don't give back any of the gains that we've made. We want to keep. That's what separates professionals from amateurs, is professionals learn how to keep the money, amateurs give it back. Yeah, SE was a TPS setup. Here, I'll show you from the watch list. So you can see here, I love this company. The growth is amazing. I'm not a value investor for what it's worth, though. So it has some nice stack squeezes. So when you see some nice stack squeezes, it's a great sign. Between 145 and 147 has nice support. It actually gapped down below that today, gave us a nice entry. So that's the SE from the watch list. All right, here we go. How to find MOMO stocks and play them correctly, more importantly, right? That's what we want to do. So the first thing that you want to do is take a screenshot of this. And guys, if you don't have access to the elite videos, you can record me or take screenshots of this stuff. But the process is identify morning movers. Now, you can use Jason's momentum scanner or Jeff's momentum scanner. They each have a momentum scanner. I don't know if you have access to that. And there's other ways to do it, free ways to do it, like marketwatch.com. Then you want to check and see why these are running, and if they're running on fluff news versus something that could actually push the stock and hold it. Then you identify the float. Low float stocks are easily manipulated. And so the lower the float, the easier or the higher the chance that it could be manipulated. Then you look at the SEC filings. And guys, this is key because you got to know if a company can dilute and how much. And then you produce your thesis and follow your plan. All right, so we're going to refer back to this so you can take a screenshot of it. But we're going to go through it here. So identify morning movers. I have with E-Trade, I have a scanner that just pops up and says, hey, this stock's up more than 5% in pre-market or post-market. And so through brokers, through what I already mentioned about JB and JW, or you can go to marketwatch.com and plenty of other places to get, and if you have Market Chameleon, they have them as well. And so once you identify the morning movers, then you need to say, hey, is this news fluff or is it fundamental? So some examples of News is a new contract. It's increasing their revenue. A new FDA approval. That one's kind of tricky because, you get FDA approval, but your expenses go up because you have to market that drug now. COVID-19, a long time ago, when COVID first started hitting the U.S., this would pop stocks. All you had to do was put COVID in your PR and you were through the roof. But now they've kind of faded. And earnings, right? And so a fundamental change will increase or decrease revenue and expenses. Another example is change of management. So does anybody know of a stock today that people have been playing because there was some type of change in ownership structure, management, board, etc.? Anyone know it? Yeah, there you go. Exactly. So, and what happened? The stock came crashing down. And so these are the things that you look for. Now, my favorite one of these, of course, is called being trumped. When I put this slide together, Trump had just gone after Twitter. Another example of being trumped is Kodak. He got trumped to the positive, right? And workhorse as well. So you can be trumped by our president for positive and for negative. Now, float, does everybody know what float means? Because it's a huge part of momentum stocks. You have float, and then you have outstanding shares. Float is the total amount of shares available to trade, right? And then you have everything else. So if a stock has 100 million shares, but only 1 million shares are available for trading, well, then that's what your float is, right? And so the lower the float, the easier it is to manipulate. So an example is Snow. Snow just came out. Don't quote me on these numbers. I don't remember, but I think Snow's like 28 million float, but it has many more shares, but those cannot be traded right now. And so when you're looking at the float for Snow, you're actually only looking at 28 million shares. Now, does everybody know what the whale is? The whale is basically the person that is controlling the stock, that is manipulating it. It's called the axe on level 2. And the goal for the company is always to make more money. Okay? So remember, these low float stocks are being manipulated, and you want to join the ride for whatever side they're going on. Now, how many of you guys have ever looked up and read an SEC filing? Put a 5 in if you've actually read an SEC filing. SEC filings can be very overwhelming. Good? Oh, good. We've got some people in here that get in there and read. Nice. Mitzi, Wayne, Gary, David, Randy, Batista, Colin, George. Okay, good. Good job, guys. Now, are you guys able to understand them? Are you guys able to look for the data that you're looking for and be able to pull it out? Because they can be overwhelming, and there's a lot of them. But for me, what I did was I just dove headfirst into them. I just started reading them, and eventually you start to get down the lingo. Linda, yeah, we should have a replay of it. I'm recording it, so yes, we will. Now, when I go into these SEC filings, what I'm looking for these lower float plays is what's called overhead supply or dilution, right? So dilution means you increase the number of shares of a company. How do you do that? Well, examples are warrants. Does anybody know what a warrant is? Convertible note. Does anybody know what a convertible note is? Type it in if you know what these are. Tell me what they are in chat. Show me how genius you are. Let's see it. And then you have offerings, right? Everybody knows what an offering is. Shelf offerings are like an S3 where they pull it down off the shelf, and then you have pipe offerings, private placements, S1s, and things like that, right? Yeah, so it's good job, Alan. So a warrant is the right to buy at a price. So let's say a stock is at $10. If you have a right to buy the stock at $1, but then you could sell it for 10, what are you going to do? You're going to exercise that right and then sell it for $10. That's true. You got the right idea. That's the idea for it. But a lot of times when offerings are put out, they'll say, hey, you can have a warrant, but it's going to be higher than the stock is right now. And you take that warrant in hopes that you can exercise that in the future. Now, there's different warrants. There's pre-funded warrants as well, and I have another video on that, or we can do another training on it that goes into depth about this dilution a lot more. So you can dig into those and convertible notes. It's all very similar, but just for this particular presentation, just understand that it's dilution, and if you're looking to long, you don't want a lot of dilution. I think if I got the ticker right, I think Genus was one. It got up to $11, and there was 12 million warrants that were registered at 60 cents. So I definitely shorted that stock. And so for a short, you want to look for a high amount of overhead. All right, oh yeah, so guys, there's two places that I go for the SEC filings. The official page is the Edgar website, but I also use BAM SEC because it's easier for me to search in BAM SEC. And then once you develop your thesis, you have to stick to your plan, right? So stock ABCD, it's gapping up to $10. It's got 12 million warrants at $5. It is 12 million float, so you're going to be able to dilute this basically 100%. So I'm going to short it, right? Easy. Now, once you get the hang of SEC filings, you can actually reverse engineer these. And I've got about a 10-minute video that we can send out to show you. But up here at the top, you can see this was on one of my watch lists that I sent out. I said, hey guys, CYCC, it did a reverse split. It now only has 860,000 shares total. It's a nano float. That for me, that just means really, really, really small, like very. It only burns about 650K per month. It has plenty of cash for a while. However, they filed an S1A, which means they amended their S1 with Roth, which is a known pumping company. And I said, probably a pump on the way. Your risk here is you're risking 50 cents and you're willing to get about 300%. And it literally took like 3 days. And then we pumped it up. You can see here, right? We pumped it all the way up. Look how high this went. Almost to $20. And we were able to short it back down. This is trade zero. I use trade zero for shorting most of the time. And I use E-Trade for everything else. So if you get good at these, you can catch these both ways. You can catch them up and you can catch them down. Yeah, I post those watch list recordings on YouTube as well, guys. And so if you miss them, you can rewatch them on YouTube. And again, it's all posted on the Twitter. So if you have trouble finding it, just follow me on Twitter and you'll be able to find it. All right. Now, we're going to put this process into real life. And I'm going to show you two separate scenarios with the same stock. So ABIO had gapped up and was on everyone's scanner, right? We had found that through the process that I already went through. We went through the news, and at the time, COVID was a big, hey, we're going to buy. It was a very good way to pump your stock. Right now, it's kind of faded off. The total float was 1.5 million shares. It had low overhead, and it also had the baby shelf rule. And it was going for a high close in order to raise more. That was my thesis, according to the baby shelf rule. Do you guys know what the baby shelf rule is? For those that have not watched the video, do you guys know? Because I'm about to explain it to you. The baby shelf is extremely important when looking at stocks under 75 million. So it's important that I read this word for word. A registrant with a public float of less than $75 million may sell under a Form S-3 during any 12-month period securities having an aggregate market value of not more than 1/3 of the public float of such registrant. Okay? Now, read that a few times and you'll start to get the hang of what it means. But the reason this was put into place was the SEC didn't want people continually diluting their stock, and so they made this rule. Now, how do you calculate this public float? It's done two ways. You can pick the highest close of the last 60 days or the bid-ask average of the past 60 days. The easiest way and the highest is usually this one. You just take the highest close of the last 60 days. Okay? So that is the baby shelf rule. We'll go over that, Linda, as well, and I have a video that explains all these dilution plays. An S3, just a quick answer, is called a shelf registration. So here, I'll give you an example. When we went to ABio, this was the day of. We were looking at it the day of, the ABio SEC page. Do you see right here this S3, Linda? This S3 is telling you, hey, we've put out a shelf registration. What that means is we can do an offering. And we can do an offering up to the amount that we have included in this S3. Now, every S3 has to have an effect. The effect form is actually put out by the SEC, not the company. The SEC will send the effect form to the company and say, hey, we're good to go. But the effect means that this is usable. A lot of times, if it's not usable, they'll have to do an S3A, which means they miss some information, and then they get the effect. But once the effect is out there, this S3 can be used, and they can raise off of that. And so, when you're looking at this, especially if you're a newer trader and you are just getting into shorting, you'll see this S3, and you'll think, well, shoot, this pump can't last because they're going to raise. Especially when you look at how many... My screen's frozen here. There we go. Especially when you look how much they can raise. $75 million. Do you remember what their shares were? Do you remember how many shares they had? It was a 1.5 million float. Now they can raise 75 million. So let's let this thing run up and then we'll short it down, right? And also note right here, you can see 1.585, they're telling you the float, right? So most people that aren't paying attention to the baby shelf rule, veteran shorters, are thinking, hey, let's let this pop up and then we're going to short it down. That's because of the S3, okay? Now, we have to ask ourselves, though, is ABio underneath this baby shelf rule? So the float is 1.585, right? Now, you find the highest close from the past 60 days, and at that point, the highest close was $4.86. Now, you multiply that float, right, 1.585, times $4.86, and you get 7.7 million as what the company is worth. Is 7.7 less than 75 million? Pretty easy answer, right? Of course it is. Much lower. And just think about that. They're only worth 7.7 million, but they're saying, hey, we're going to raise 75 million. That's a lot. So a bio is underneath the baby shelf rule. So that means they can only raise 1/3 value of their float. The value of the float, again, was 7.7. You divide that by 3, you get 2.5. That's how much a bio can raise in the past 12 months, within a 12-month rolling period. Okay? Does that make sense? Is everybody up to speed on this? If you have any questions, throw them in chat, and I'll try to clear anything up. So within the past 12 months, the most a bio could raise, according to the baby shelf rule, was 2.567 million. Okay? Now, to figure out how much they had raised, what you need to do is you need to go into the SEC filing page and look up their 424s. The 424B5s are going to tell you what they've raised through their shelves, right? And you pick out the 2 that qualify for that yearly within the past 12 months. And that's how you look at how much that they've raised. And so we add them up. You got 763, you got 1.7 here, or 1 million here, so you've got about 1.8 million is what they've raised. I did some more digging, and there was a few warrants that were registered underneath that same shelf. So the total that they had raised was about 1.95 million. That's how much they had raised. So in the past 12 months, this was a bio's raise. This is how much they can raise, 2.5. So how much can a bio raise now? You just subtract 2.5 from 1.95. All right, so that gives you 600,000. Now, is a bio going to pump their stock and manipulate their stock in order to raise $600,000? And the answer to that question is no. And I'm going to show you why in the next few slides. All right, so if they can get a higher close in the next 60 days, it's going to increase the amount that they can raise. So right now it was 460. Okay, so they want to get much higher close to say, hey, let's raise a lot more. Now look, this was the chart that we showed you, the Excel sheet that we showed you of what they could raise. And this is what I was saying in chat. A bio is going to be fun today. These are my bread and butter plays. And honestly, guys, if you get 3 or 4 of these a year, you can make as much money as most people make at working a full-time job. Literally, 3 or 4 of these a year you hit, and you'll make a lot more than most people make in a year as a full-time job. And I said, hey, what these guys are doing is they're going for a high close so they can raise more. They have an effective S3, but because of the baby shelf, they can't raise. So after the day, their close will be higher. And let me show you what they were able to do. So as of 5/27/2020, this is what they could raise. One day later, after they closed at $19.21, so, you know, they went from $3, $4, $5 to almost $20 close. Now they have the ability to raise 8.2 million, right? So they literally increased their amount to raise by about $7.5 million. So does that make sense? Any questions on this and how we calculated it? I'm kind of going through it kind of fast. No questions? All right, so this is what you look for when you're trying to find stocks to long and short from the MOMO plays. You want to say, first off, can they dilute? Can they dilute without the rules of the baby shelf affecting you? So like we knew a bio, they had the S3, but they couldn't do it because they were underneath the baby shelf. All right, so this was just me playing a bio. We'll run through it real quick. I wanted to get in before the Robinhood push, which comes in about 9 o'clock, 6 o'clock my time, and you can see it ran up. This gave us a false breakout. So if you guys were here on Friday, I was telling you about Sava as it went above and then it started coming down. We had about 5 million volume come in and it gave us a false breakout. That's showing you, hey, there's not enough buyers to maintain this push. And then it pulled back and it came down here to this pre-drawn lines, gave us a high wave candle, broke above it, go long. Again, what do we have here? Another false breakout. I thought we were going to be able to rock it up here, but it wasn't able to hold it. And this is a common thing for these types of stocks. You get this first wave, and then you've got to wait for kind of a settle for all the people that were buying to take their profits and for it to settle back down. So at this point, you had to sell to get out of this stock. And then it comes back down and it creates this nice little double bottom, giving you a good risk reward. And so for me, I didn't take it. It was underneath this volume profile line. And so once it got above though, I was able to say, you know what, let's get in it on this retest. So for me, I get in on retest. It broke the VWAP, pulled back down to this volume profile line. That's my what do you call it? Go-to move. You know, and when I play basketball, I had a go-to move. This is my go-to move. I buy the retest off of like a VWAP break with breaking through a volume profile. Yeah, there's extra videos on this as well. Now you can see what happened after this double bottom high day break. We really started ramping up, and this is where you have to exercise your patience. You know they're going for a high close. You have to pay attention to the time, right? If it's not late in the day, you know you still got a chance of playing higher. I trim and trail, and I don't deal with emotion. Again, I have a training on psychology that deals with that. And I was measuring the breakouts right here. Nate has lessons on symmetry. If you have access to his, that'll show you. You can do symmetry up and down. This was a lower breakout right here. So you start seeing lower lows. Those are sell shorts, right? And then it created this beautiful downward trend right to the VWAP and created this beautiful pattern. And one of my favorite plays is a breakthrough VWAP, trap the shorts, get everybody thinking it's going to fade off for the rest of the day. You see how we're underneath these volume profile people here? Everybody's thinking, all right, that was their push. They trap you, and then this was just me telling them what needed to happen. And then bam, you start pushing above, you break this downtrend, and you're setting up a perfect double top breakthrough here. So you've got, at this point, it's like pile in. For me, it's like put full buying power towards this trade because high chances of new high a day at this point. All right, let's see. And so I was telling people, hey, at this point, it still has room. And I think at the end of the day, yeah, here we go. It went up to over $21, $22. All right, so this is how you play those. This was a review for a lot of you. Just keep as a note, if companies aren't going for high closes, what they'll do is they'll start to dump around 230. So pay attention to about that 230 dump. If you see a MOMO stock starting to dump around 230, that's somebody trying to get out because they don't want to have to file with the SEC that they've bought more shares. Now as a review, key, low float, float rotation. Float rotation simply means the amount of float was traded over and over again. 1.5 million float, right? So if we're doing 200 million shares, that float is being rotated over and over. And on my bio, it float rotated, I think, 50 times. And that's it, guys. So that's the review for the MOMO plays. Let me see if there's any questions, and I'm going to stop the recording so you guys can have this to watch back at any time. So Shivam says, from where do you get how much has been raised in the last 12 rolling month period? Which filing was that info? I missed that part. Thanks. Yeah, not a problem here. Let me show you again. I'll pull that up. So an S3 is a shelf registration, right? And what that means is that it can sit on the shelf and stay there for 3 years. That's how long an S3 is good for. And so if you're looking, you wanna be able to look and see their 424B5s. And this is going to show you how much has been raised, Shivam. So their 424B5s, when I pulled them up, this is what it looked like. 1 mil and 700,000. So it was about 1.8 million. Does that answer your question, Shivam? Nick, how many of those S3 MOMOs in a year usually? You know, Nick, for me, I probably catch about 10, about once a month. But what's funny is you'll go 3 months with none. And then you'll go 1 month and have 4. And the reason that is because the market goes in waves. You'll have times where MOMO stocks are on fire and then they just go dead. And so you just have to pay attention to the market and what it's giving. Right now, we haven't had a lot of MOMOs. I've got a feeling, total gut feeling, that we're going to start seeing those in the next month, in October. Usually when the market gets shaky, MOMO stocks start to pick up. And so going into the election, I think they're going to start picking up here in a minute. And so that's how many I'm looking for. Bruno, it was about how to catch MOMO trades. So yeah, what we can do is I'll have Heatha send this out. I'm going to stop the recording unless there's any other questions, and we can post this for everybody to review.